Welcome to the LA Business Podcast, your destination to hear stories of how businesses grow and scale. I'm Robert Brill, CEO of Brill Media and the host of this podcast. Now, let's jump right into this week's interview. Hey everyone, welcome to another episode of the LA Business Podcast. Today our guest is Gabe Gottlieb, co-founder and CEO of Pathmatics. And Pathmatics is a digital ad intelligence platform that tracks and analyzes online ad strategies. We definitely want to learn more about what Pathmatics does. Tell us a little bit about why and how you started the business, and let's hear about the journey, because you recently exited and sold, which is congratulations. I think that's probably the dream of a lot of business owners. Tell us a little bit about Pathmatics.
Sure. Yeah, it's been a journey is the right word. It's been a journey. So I founded the business a little over 10 years ago with my co-founder, Tom. We'd worked together previously at Microsoft, and we're, interested in starting a business. We actually are outsiders from the space. So we had a good friend who was in the digital marketing space and said, hey, there's a lot of opportunity here. Publishers don't know, which ads show up on their site. Advertisers often don't know where they're showing up. And that shouldn't be the case. And we kind of, as good software engineers, dug in and started looking at the problem and realized, hey, absolutely, that shouldn't be the case. Digital marketing, since it's digital by nature, it should be very transparent. It should be trackable. Obviously with privacy constraints and all those kinds of things. But when you compare it to a billboard or TV commercials where you don't know who's sitting on the couch, don't know if anyone's even there. With digital, we have all the information, and we felt like this was a space that didn't have transparency for no good reason. And so we founded the business, as I said, about 10 years ago. Started very simply, the two of us in a small co-working space, coding away. We were both software engineers by trade, and kind of just built a very, very simple first version of the product. We only covered desktop web advertisements. So this was about 10 years ago. All those annoying banners that folks see, that you see as you're browsing the web.
Annoying? What do you mean annoying? That's how I make a living.
I make a living doing that as well. Yeah. So we started with desktop display, and the business from there. I always say we're not rocket scientists. Like, it was very organic how the business grew. We started with, as I said, those banners, and clients said, hey, can you track video? And we said, absolutely, we can track video. So we did video. They said, can you track mobile? We said, sure. So we added mobile. Obviously you say sure, and then it takes years to code and develop. We added social, we added all these other channels, and we've really, over the last 10 years, not strayed very far from that initial vision. And so if you looked at the product, it's gotten much better, all sorts of enhancements, but kind of the same core data around who's advertising, how much are they spending, what creatives are they running, things like that. It's just turned out to be really valuable. And I don't think we didn't realize it at the time, because we were tech guys. We'd worked together at Microsoft, and obviously we're digitally native, but digital was still early in its infancy 10 years ago. And there were all these, when I was doing investor presentations, I included all these slides where, like, TV advertising would be up here and digital advertising would be down here, and say, hey, in a couple of years it's gonna surpass, the digital's gonna catch up to TV. Well, now you look at those graphs, and digital's up here and TV's way down here. It's kind of amazing. And so
it was MySpace. It was like MySpace was going like this for a while, and then it was going like this, and Facebook was coming up, and then no one knows about MySpace anymore.
No, exactly.
And that was right around 2010, 2011, where it's like, all right, we're seeing the race in real time in the diminishment of viewership or consumption on MySpace. That was a very interesting time. And the question was, is Facebook brand safe?
Yeah, absolutely. It's still kind of a question, actually. People, there's still a question there. Yeah, so super interesting time, and I think we were early, but as we built product and kind of really found what marketers wanted and which parts of the data were interesting and what actually helped them make business decisions, the market was growing around us. And so we were very fortunate. Over the last couple of years, the business has grown very substantially. We got to work with top brand names, all the top agencies in the space, many of the top CPG, financial, et cetera, marketers. So the business was growing really well. we became profitable, which was a really exciting milestone for us. As I'm sure all the business owners listening can.
When did you? How long after? So a couple of things. What's interesting to me is that you started the business at the sort of like right in the middle of the Great Recession. Like this was a time when there was a lot of uncertainty. I mean, was this a reaction to that, or did you want to change? Why did you move away from Microsoft and starting this business?
Yeah, I think it was reaction to change. I mean, we'd been cogs in the wheel for a while. We both kind of rose in the rungs a little bit, but it was part of a big machine, and we joked like there was literally nothing we could do to move the stock price. Like we could be the best coder in the world or the worst coder in the world, and the stock price would be the exact same. And it'd be all the big company gripes. Microsoft is a great place to work, but still very bureaucratic, still very big company. And so, yeah, the reaction was, regardless of the economy, we were bullish on technology, bullish on digital, and we thought, hey, let's build a company that we want to work for, and hopefully, other people want to work for. That was
what was the learning curve? What was the learning curve to get into advertising, right? Because you weren't a native of the advertising community.
It was very steep. Yeah, it was. We were tech guys, so this was also the time when programmatic was really starting to be talked about, and so I think we got that quickly. And then it was kind of learning the advertising world way of doing things. I'll give you an example. I don't know if you know what a jeans party is, but
a jeans party? No,
a jeans party. So this was a term I learned when we got into advertising. So apparently,
I do know what a jeans party is.
When
get your custom jeans.
Right. So a publisher wants to sell ads to an agency, right, and get the agency to buy them on behalf of their customer. And so they throw a party at, a fancy one of these designer jean stores where jeans are whatever, $300 each or something. And everyone, you get drinks, you hang out, and you get a custom pair of designer jeans, on the brand. And this was like that kind of thing kind of blew our minds as engineers. There we go.
These are my custom sneakers.
So you went to a sneaker party.
Yeah, I went to a sneaker party. It was, and the reason these are, I named my dog Ice Cream, so like that's why because it's connected to something I really love. But the idea is that like I got them a size too small, so I never actually could wear them.
But now you get to put them on display.
But yeah, I mean, like totally. Like I remember working at Universal McCann. I was on the varsity team. Like I was on the theatrical release. My first advertising job out of college, and it was like, let me put this away. And it was like you're on the varsity team. The first 2 months I worked in advertising. Literally, I was getting paid to learn. I had no idea what was going on. I barely knew what a banner ad was. This was in 2004. And we went to Spago twice. And I was like, all right, I'm just out of college.
Right.
I'm going to get paid in food. This is great.
Right. And you're probably you're happy to get paid in Spago, right?
Legit.
Yeah. So yeah, I mean, to answer your question, it definitely is a learning curve to learn advertising. But I think we came at it with a very data-driven perspective. You can probably tell already that I'm a data-driven guy and very kind of, show me the data, show me the facts. And so I think clients appreciated that and saw that we were coming with data, saw that, we were very focused there. And so I think that enabled us to enamor ourselves with clients, even though, maybe we didn't know the space extremely well.
So is your point about the jeans party or all the gifts and all that stuff that like buyers were making decisions that maybe weren't data driven?
100%.
But to be very fair, 2000, at least when I started in 2004 to 2010, there was it was still, the business was categorized as a relationship business. Yep. That's all it was. I mean, Absolutely. There was data, sure, but there wasn't the real-time feedback loop that you now have with programmatic advertising.
100%. I agree.
And your business was part of that usher of change that capitalized on that programmatic ecosystem.
No, I like to think that we brought change. I got a question for you, actually. Having sat on the theatrical team, I think that was something that really struck me. Was obviously in LA, we talked to a lot of the studios, and it felt like, advertising a movie is a tough thing, right? Because you've got essentially a week window when you're trying to get everyone to buy, you know this better than me, but buy tickets for the weekend.
Right. It's that one Friday. That one weekend makes the next 15 years of revenue of the movie.
Right. So, but the interesting thing is, so then you're very risk averse, right? Like you're going to run a very similar, like the thing that worked with the other movie, you're going to try to run. Like there's no incentive to experiment or change.
I disagree.
Okay.
And I got to give kudos to some of the people I used to work with. So I had a number of people I reported to. I was like literally the lowest on the totem pole. I was like an assistant digital media buyer, right? Paid to learn.
Yep.
Just don't make mistakes was, and when I did make mistakes, I got my hands slapped. But I will give it to the folks that I work with. Elias, I used to work with Elias Splishner, Rob Dickahoot. Elias is now running, I don't know, has a massive title at Sony Pictures. Our client at the time at Sony was Dwight Keynes. He was a decision maker fundamentally that gave us the opportunity to actually take risks, because I've worked I've had other jobs at other major studios who took no risks whatsoever, to the point where they put money into like Spider-Man. Like, who puts aggressive advertising money into Spider-Man when you know it's going to open big? Sony Pictures did that because they knew they had something, and they put money into it because it was going to be even bigger than it could have been. The point is, Sony Pictures, I got to say that they took the risk, and they allowed us to do really interesting things, to the point like When a Stranger Calls, the movie When a Stranger Calls, we actually won an award partially because of the contribution of Sony, partially because of what we did on the media plan side. We're doing an AOL Instant Messenger bot on cool. Like in 2006.
A chat bot before chatbots were a thing.
We did a chat bot. We did you could call a phone number where Jill, the main character who was getting calls from inside the house, like you were talking to her saying whatever, having a conversation, say, hold on, there's weird conversation, there's weird calls from inside the house or whatever. So you're experiencing the movie, and that only happens when the leadership at the top likes to take risks. But I see your point. If you have a formula, stick with it. I just wanted to point out that
I appreciate that.
Really talented people at Sony, I think, did an excellent job. And probably you might imagine that's the reason why I love advertising so much, because of that experience with Elias Splishner and Rob Dickahoot and Dwight Keynes and Joe Epstein and whatnot.
And I mean, that's the beauty of advertising, and especially digital, is you can experiment and you can play around and you have the data, right? You can be super creative. I still think there's a ton of really interesting like storytelling and other things we can do with digital that folks aren't yet doing today. And think about, pacing out messaging, right? Like if a user saw certain messaging, you can give them further messaging. I think there's a lot of really interesting creative and storytelling things. And people are starting to do that, but I think it's a really big opportunity still going forward.
So so tell us about like the time in 2010, and really tell us about like, when did you become profitable? When did you realize there's light at the end of the tunnel?
Yeah, so long distance between 2010 and that. Yeah, so maybe I'll answer the second part first. So yeah, we became profitable in 2019. Was our first year of profitability, and we were a venture funded startup. So the goal was take venture funding, spend it to grow the business, grow faster than you can organically. But I will say, as a CEO, it keeps you up at night watching that bank account tick down and knowing that you're burning, and either you have to reach some sort of milestone, either a funding milestone or an exit milestone to keep it going. So yeah, it was incredible when, and our business is interesting because we gather a ton of data, right? And so there's a lot of cost in gathering that data, and then the more customers we have, kind of the lower the cost is per client in gathering that data. So yeah, so that dynamic allowed us to reach profitability, and it was a huge milestone. And then no surprise, we've remained profitable since.
So what do you do in that case when you see the tally running lower, and you know that there's a finite amount of money, even though it's not coming out of your personal bank account, you are the steward and the responsible party of it. What actions do you take, and what lessons do you learn along the way about optimizing this to the success of your business?
Yeah, hopefully, there's a couple of ways that goes, right? Hopefully, and this was the case, we kind of lived both edges of the sword. Hopefully you're growing fast enough, you can tell a story, you can paint a picture, and so you can get the next round of funding done, you can get the next investor involved. Like we talked about timing, there's times when our space was hot, and there's times when our space definitely wasn't hot. In kind of 2015, 2016, 2017, people didn't like ad tech or anything near ad tech. Now ad tech's hot again, and ad tech was hot kind of in 2012, 2013. And so you have to hope that and execute so that your business is growing and you're in a space that people want to fund and get funding, or you have to make the hard choices to try to constrain burn. And we did have a point in our history where we grew a little too fast, on the headcount side, and sadly we had to lay off folks, and that was that's the worst thing as a business owner, that looking someone in the eye and saying, sorry, we messed up, there's not a position for you anymore. But you have to do it for the sake of the business, for the sake of the other folks working there.
Do you like pile on salespeople? I mean, look, I've had enough my fair share of pitch meetings to know that there's a lot of salespeople in the marketplace, very talented people, and a lot of companies in this space, they 100% focus on relationships, and they focus on human to human selling.
Yep.
I believe fundamentally that changes now as we're into this much more robust place where Instagram and Facebook and advertising, B2B advertising, becomes more robust. But like going back to 2010, 2013, 2015, 2019, what are the key drivers of that growth? And of course, I get your point. You have to have a good product. You have to be in an industry that is it is ascending or has some good positivity towards it, right? You can't sell something that people don't want fundamentally. But like, what do you focus your effort on? Do you get a ton of salespeople? Like, tell us about that.
Yeah. I mean, I didn't go into my background too much, but I studied computer science and finance at University of Pennsylvania. So I kind of have two sides of my brain, but definitely the kind of product engineer, kind of coming up through Microsoft, taught me about building products. So we were always a product-led company, and our philosophy was always, build the best thing and just be very differentiated. And the salespeople have a much easier time. I mean, there are plenty of companies that are in our space the other direction, very sales-driven, like you said, relationship-driven, kind of really salesy, a lot of flash and no sizzle, or whatever the saying is. And so so we really tried to make a name for ourselves with the best product, the best data. But then you touch on hiring salespeople it's kind of, I always say, like when do you push on the gas and when do you let off the gas? And it's really hard to know when that's the right time to do it, because you want to, if you're feeling momentum, you want to press on the gas and you want to go, but it's hard to know, is this sustainable momentum, or is this just like, hey, we got a couple deals and it's going to dry up again. And then when you're actually doing really well, if you don't step on the gas, then it's almost too late, right? Like then you're letting opportunities go, because it takes a salesperson, maybe 6 months to ramp up on a complicated product and really get productive. And if it takes you 2-3 months to find that salesperson, you're 9 months out from when you say step on the gas to actually have that butt in seat, if you will. And so that's been something, candidly, I think is one of the hardest things of running a business, and especially a startup where you're really pushed to grow, is knowing when kind of when you're feeling the signals and when it's right to step on the gas, and when you have to back off on those sales hires.
Absolutely. I mean, just talent overall in the programmatic advertising ecosystem is, I mean, look, there's ebbs and flows, but generally there's not enough talent.
Yep.
Right. There's way more jobs than there are, talented hands on keyboard or account people or salespeople or whatnot. And when you find them, boy, you gotta love them. You gotta love them so they stay.
And we're in a time right now when that's at its peak, I think. I mean, talented folks have any number of opportunities right now. It's just a really, I think, unique time, and when it's really hard to find those people. And but you need them because the market's really growing.
Yeah. Okay, so you're a product-driven company. So is your strategy to get sampling, to get people in front of your product to take a look at it, and they are going to fall in love with it? Is that kind of like the overall strategy?
Yeah, the cool thing about our product is, so we gather data whether you're a client or not. So we gather our data through opt-in panels primarily, and so we're gathering a really interesting sample of what's happening in the advertising ecosystem, across the board. So, if you're, say, in auto insurance, right, we've got data on Geico and Progressive and Liberty Mutual and all the top players, because our panel sees these ads. And so we can then go to one of these players and basically show them what we would show, what they would get to see if they were a client. And so we can go in and give a really data-driven pitch and say, hey, whatever, I'm just making this up. Hey, Geico, we see Progressive is investing here. They're running this kind of ads. They're really doubling down on Instagram or whatever it is. And we can teach them something in that first sales meeting, and that's an incredible advantage we have in terms of just being a business where we can do that. And so, we've trained our salespeople and our outreach folks and stuff like that to really lead with data. If you send a generic email, like you said, you get pitches all day, right? It falls flat. But if you send an email to Geico and say, hey, Geico, I noticed that Progressive is doing this, Liberty Mutual is doing that. Why are you guys doing something else, right? And that'll get their attention. Hopefully that gets the meeting, and then we get and so our goal is really just get that first meeting, have that data-driven discussion. Maybe they're not ready. Maybe they, don't have the capability in-house. There's thousands of reasons why it's not the right time, it's not the right buy, but that usually really gets their attention. And then we try to really map out, like, hey, here's how you're going to find value. Here's the path to purchase and to success, combined success as a client.
Tell us about how the last year and a half has been for your company. And it's been a whirlwind roller coaster since about March 13th. March 13th was that Friday, the 13th, when South by Southwest was canceled. And that was my notice. I was like, holy cow, this is going to be a big deal.
Yeah, wild ride, definitely. I think right around that date, we had an all hands and we switched to working from home. And, I think I had on the slides, hey, we're going to do this for a couple of weeks and see what happens, right? We all laugh at how naive we were. We obviously started building contingency plans, like, hey, what's our cash situation? What happens if people don't pay their bills? All these things. We were in an amazing position though, because we track digital and because that's where everyone went, right? Like everyone went home and piled on their Zoom and their computers and their TVs and their mobile phones. That's where what everyone wanted intelligence about. And everyone, it was such a time of uncertainty. All our clients wanted to know what was happening in the market, what were other people doing. And so the thing that helped me sleep at night through those first few months was our usage skyrocketed. So we track how many people log into the platform, how often they're logging in, and we hit just all-time highs, which, was I talking to customers who were saying, hey, we're an agency for travel and we're going out of business because, all 5 of our travel customers were, pulled out? Like, absolutely, were we getting those calls? But the vast majority of our clients were logging in, often and really using the platform. So that helps us in the early days. And then, I think like most businesses in our space, kind of that Q2 of 2020 was that weird time. And then Q3, people said, hey, like, we got to do digital. We've got to keep investing. The economy's not going to fall off a cliff. And so Q3 turned out to be, kind of started slow and then ended incredibly well. Started out to be a record quarter. Q4 was a record quarter. Q1 of this year was a record quarter. At the same time, you talked about our acquisition. Kind of, I guess it was probably late Q3, early Q4. We started having really interesting companies, knocking on our door, asking us about our data. I'd known the Sensor Tower team for a long time. Alex, the CEO, and we shared an investor, and so we used to hang out at investor conferences and talk about things we could do together that we never did a formal partnership. And he was seeing the same thing. So Sensor Tower was very focused on mobile. We're the leading provider of mobile app intelligence, and so he was seeing the same thing. Kind of like, hey, everyone went home and sat on their phone, right? And so every brand overnight had to become a mobile brand, had to become a digital brand. And so he was getting asked about the further kind of digital outside of mobile. We were getting really asked about, hey, can I see more about my consumer? Can I see more about my competitors? Can I see more specifically on mobile? And so we started talking, and I just kept getting more excited the more we talked. How we could tie our data sets together, how we could tell our clients just a much broader story, a much more powerful story. And so, fast forward to May of this year, we officially tied the knot. So Pathmatics became part of Sensor Tower, and then now we get to tell a much bigger story to clients, and we're really starting to see that in the market where where we can kind of tie those insights together and tell a really interesting story.
What's the motivation to exit a business, or what was your motivation to exit the business? And I'm really interested from the perspective, like it's always interesting when two companies merge or acquire, whatever the case is, but as a business owner, it's a completely different like equation, right? Like, what's your motivation? Is it financial? Is it family? Is it being able to tell a bigger picture? Is it money? Like, tell us a little bit about how those conversations go.
Yeah, I think that there's some interesting dynamics for us. We were a venture-backed business, and so as I said, we took money. The first money we took was in 2012, and those venture investors have a clock. I was fortunate to work with incredible investors, and there was never a like, hey Gabe, we need our money back, or hey Gabe, it's time, right? But there was a kind of the nudge at the board dinner. It's like, hey, how are we doing? Any interesting inbound? And I started to get the picture that the venture investors were ready for a return. And candidly, I was in, my co-founder and I had put money into the business, never taken money out. And so, also we built something really interesting, and it felt like it was time to take, as I say, take some chips off the table. This deal was interesting in that, the investors got cashed out, and then the employees, and obviously most prominently, my co-founder and I actually rolled a very significant portion of our proceeds into the combined entity. So we kind of got the best of both worlds, where we got some liquidity, got to call it a win, but we're in for the next round, and so it's kind of ticked all those boxes where we get to invest in the next thing, and really feel I'm super optimistic about that, about kind of the broader vision. Yeah.
I mean, it's interesting. Like, Pathmatics has in my opinion, has a really great brand name in the advertising space.
Thank you.
And I'm not familiar with Sensor Tower, which probably is just much more a me thing. Do you have the sense that Sensor Tower has the same name recognition as Pathmatics?
So it's really interesting. So I think we have that brand recognition in the marketing space, and I appreciate you saying that. I feel like one of the metrics we looked at is like, hey, people actually put I know Pathmatics on their LinkedIn profiles, right? Like, that's a cool thing where like, hey, the brand's really resonated when like someone is saying, hey, I have skills in Pathmatics as a attribute of their abilities. So we feel like we've got a great brand name. Sensor Tower is that brand name, but in the mobile space. So if you talk to like a mobile first brand, someone who's, say, a mobile gaming company where they make all their money on mobile, they're like, many of their KPIs are driven by Sensor Tower data. They're comparing themselves to their competition, understanding their share of downloads, understanding a competitor's retention versus their retention, like from day-to-day user acquisition teams all the way up to board level. Sensor Tower is that brand name. We're in a bunch of 10Qs, when and S1s when companies file to go public, and they talk about how good they are. They often cite Sensor Tower data, which is really cool. So yeah, we're in an interesting position where we're a company with two really strong brand names, and I'm sure you as a marketer can empathize with this kind of an interesting challenge to figure out how to navigate, but a good problem to have as well.
What as we wrap up, Gabe, what does the next year look like, or as we kind of like finish 2021 and go into 2022? I mean, like, there's still a bunch of uncertainty. I'm not specifically talking about the ad markets, but I'm talking about like the world. Like, things are closing down. Events are, as we speak, earlier today, an event that we're marketing just got shut down. So what does the world look like? Does that uncertainty, do you feel that uncertainty, or is it more stable considering? Just tell me about what the next year and a half looks like for you.
Yeah, I mean, I think I don't know if you're asking from a business perspective or as a business owner and kind of C-level executive, but I think from there's a lot of interesting questions around our team. I mean, we let our we as a Sensor Tower, the combined business, our lease was up in San Francisco, so like everyone did, if your lease was up while you were working from home, you let it go, and now we're trying to decide, hey, how much space do we want? Do we make a long-term commitment? Do we make a short-term commitment? I tend to be and so we actually, to provide a little interesting color, so we on the Pathmatics side actually opened our office here in LA. Required vaccination. A bunch of the team came back. It was amazing. Then a couple of weeks later, we got the LA County mask mandate came down. We had to, obviously we're going to abide by the mask mandate, so we required masks in the office. Attendance dropped, though it didn't drop to zero. Actually, I was there yesterday, and there were probably 6 or 7 other folks there. So I think folks are really craving that return to normalcy. That I never thought I'd say I can't wait to get back in the office, but I was really excited to be back in the office. So I think there is a ton of uncertainty, but I think we're a robust country, a robust species, a robust industry. COVID has always come in waves, and there's kind of these waves of pessimism, waves of uncertainty. It feels like, in my mind, we're kind of cresting one of those. And I'm, on the C-level executive team, I'm advocating for, let's get space, let's invest. I think obviously starting a business, you have to be an optimist, but I think all the trends are going our way, and then I think we'll be robust.
I think in my peer group of entrepreneurs, I'm definitely the pessimist. I'm finding that I'm like one of the very few. I'm not a pessimist in that, like, I just think my belief is that this is not going to be a thing that rolls by quickly. I think this will be we're in like the first year of a 5-year time frame of massive uncertainty.
Interesting. Yeah.
That's what and then I'm talking about like being able to travel, like leisure travel. I'm talking about feeling comfortable going out into large public spaces. Like we have a 2.5-year-old, like I can't travel. I can't get on an airplane with an unvaccinated 2.5-year-old. Like that, to me, that feels like the wrong thing to do. And I also understand that there are a lot of people who feel like that's not the wrong thing to do.
Right.
And the difference there is fascinating to me. What about the business? Tell us about Sensor Tower. Like, what, from a business perspective, what components are you focusing on? Is it improving the product, more sales, other marketing?
All of the above. We're in hyper growth mode. We're growing super quickly. I think we have a really strong and differentiated product. We both did kind of independently, and then the combination. I mean, it's ours to win here. Like if we've got these really interesting data sets. We're starting to build the first stitchings of connecting together. Both teams had a really robust roadmap. So we're trying to make sure we deliver on the promises we made, but also we feel like we're sitting on this really exciting opportunity. So we want to dive in. So yeah, for us, it's a number of things. I mean, we're building more features on both products. We think digital advertising is growing rapidly, mobile is growing rapidly, but the combination of our data sets are where the really interesting outcomes are, and we think that's really, really exciting opportunity.
I do have 2 more questions for you. One, sure. I want to talk about the iOS change, but before I want to talk about that, I'm actually really curious. When you say you're in hyper growth mode, what are the things you look at that tell you, okay, yeah, we're in hyper growth mode? Is it purely numbers? Is it headcount? Is it requests? Is it leads? What do you look at?
Yeah, I think it's all that. Yeah, I mean, revenue growth, headcount growth. We've got 30 open positions or something. Like as we said, it's a really tough time to hire, but we're aggressively trying to hire. Yeah, it's leads coming in. It's I think addressable market back to the kind of step on the gas, step on the brake. It's like there's a really interesting market right now, and so there's going to be more competitors. There's going to be more folks. There's going to be more data out there, but we're the leaders right now. Like it's ours, as I said, ours to win. And so you want to lean into that. You want to get there before others do, and build those relationships and build those long-term relationships with brands and agencies and folks out there.
Does your data look at the recent shift in iOS and 14 and use of Android versus iOS and attribution? Does your data go into any of that, or is there any viewpoint you have on that change in the market?
Yeah, I mean, I think it's fascinating. So we sit in an interesting spot because we measure through panels, as I mentioned. And so the cool thing about a panel is you're not just a pixel on a user's page, or you're not one app that's trying to track across other apps. Like when you're a panel, you actually see, and we obviously get the users to opt in, and we're very privacy focused, but you get to see the user's journey across apps and across what they do. And so I think that's super powerful. And so we've been able to see, we're able to see really interesting things. I think, you mentioned attribution. One thing we've seen is an area, it's called ASO. So essentially App Store optimization, right? So it's thinking about what keywords you put in your app name, what keywords you put in the description, how do you title your app, right? And that's always been an important part of mobile, but people are really, really interested in that now because they've lost the trackability of other channels. So they used to run app install ads across a bunch of ad networks. They've lost the ability to track that. And so like, hey, like let me do the thing I know if I invest in will work, and I know there's like a clear ROI. So let me kind of get back to basics. So we see a lot of folks kind of getting back to those interesting basics. But yeah, I mean, it's going to change. I mean, the marketing landscape is going to change. And I think it'll be really interesting to see, obviously Google's the other big player, and they're in, they're out, their cookies are off, cookies are back on. Like they can't seem to keep their story straight. It's next year, it's the year after. So I think that dynamic will be really interesting too, because we see people also using what's happening on Android as a benchmark for iOS, kind of as a proxy. And so if they lose that proxy, I think that'll be a big change.
Yeah, the world of the digital advertising and marketing world of 2030 is going to be very different. Clearly, it's just a question of how and when those changes are going to come into effect. We've seen the first shoe to drop, I think, with iOS. Brand becomes particularly important. Going back to basics, nurturing audiences,
creative, right? Like I mean, we always say creative is over 50%, right? But I think it's super important. Yeah.
Awesome. Gabe Gottlieb, CEO and co-founder of Pathmatics, now with Sensor Tower. Thanks for being with us today.
Thanks for having me. It was a pleasure.